Hey there! Quick question. What do clowns, credit cards, and collapsing Jenga towers have in common? Give up? They all look totally fine, until everything falls apart at once. Today, we're talking about what would happen if everybody, yes, everybody, just stopped paying back their loans. No credit card payments, no student loans, no mortgage, no car loans, nothing. It sounds like some chaotic TikTok trend, but imagine it actually happened. Let's start with our friend Bob. Bob is a regular guy. He's got a job, a Netflix account, and he's still paying off that weirdly expensive blender he bought during lockdown. Bob owes money on his car. He's got a mortgage, a bit of credit card debt. But Bob's been doing okay. He pays his bills, mostly on time, and even treats himself to overpriced oat milk lattes on Fridays. Now imagine one morning, Bob wakes up, stretches, and thinks, you know what? I'm just not gonna pay anything this month. No car payment, no mortgage. And then his neighbor Alice does the same thing, and then Steve, and then Karen, and soon, millions of people just stop paying. At first, Bob feels free, like he's won some invisible game. He posts a meme about escaping capitalism. He's got extra cash to spend on snacks and concert tickets. But then the phone starts ringing. It's the bank. And Bob ignores it because Bob is off the grid now. But here's where the dominoes start to fall. You see, when Bob doesn't pay his mortgage, the bank doesn't just shrug and go, oh well, Bob's being quirky again. Nope. That mortgage was money the bank expected to get. And the bank, it's not just sitting on a pile of gold coins like some dragon. That loan? It's part of a big, messy financial ecosystem. Let's zoom out. The bank doesn't use its own money to give Bob a loan. It borrows money too. From other banks, from investors, even from central banks. It relies on people like Bob paying back their loans so that it can keep paying its debts. So when Bob doesn't pay, the bank gets a little nervous. When everyone doesn't pay, the bank starts sweating through its pinstripe suit. Now let's talk about how weird this gets. Remember those guys in suits who buy pieces of loans and sell them like trading cards? They're suddenly holding a bunch of IOUs that are turning into uh-ohs. Investors panic. They stop buying loan-backed assets. Banks stop trusting each other. Lending freezes up. And that shiny credit card in your wallet? Yeah, the bank's not approving anyone new right now. Even Bob, who just wanted a card to get airline points for his dream trip to Cleveland. Meanwhile, companies start feeling it too. Let's say Alice owns a small business selling artisanal cat furniture. She usually gets a business loan to stock up before the holidays. But now, the bank tells her, sorry, no can do. Market's too risky. Alice can't buy materials. She can't hire workers. Suddenly, there are no luxury hammocks for cats this Christmas. Alice lays off 2 employees, Mark and Jenny. Now they can't pay their rent. Their landlords can't pay the banks. And the cycle keeps spinning, like a very unfun hamster wheel. And remember Bob? At first, he was excited to have extra money. But now the economy is slowing down. Businesses aren't getting loans, so they're cutting jobs. Consumer spending drops. The stock market takes a nosedive. Bob's boss calls him in and says, we love you, but budgets are tight. Suddenly, Bob's freewheeling life gets a lot less fun when he's unemployed, eating cereal for dinner, and dodging collection emails. And here's where it really gets messy. Because the government steps in, people are out of work, banks are shaky, markets are rattled. So now the Fed has to either print more money, cut interest rates, or start buying up toxic assets like it's on a clearance sale. Which means inflation might creep up, or even jump. The value of money drops. Imported goods get more expensive. Bob's favorite Korean skincare serum? Now double the price. And all of this started because everyone just decided, nah, I don't feel like paying today. But wait, there's more. Because remember, pensions, retirement accounts, a lot of that money is invested in the financial system. And when loans go unpaid and markets crash, guess what takes a hit? That's right, Grandma's retirement fund. And suddenly, Bob has to explain to Grandma why her cruise to Alaska just turned into a walk around the neighborhood with binoculars. But let's say this continues. Months go by and people still aren't paying. Now banks are collapsing left and right. Not just the shady ones with weird logos and free pen. Real banks, the kind you grew up trusting. The kind with TV commercials featuring puppies and smiling grandmas opening savings account. People rush to pull their money out. ATMs have lines around the block. The app crashes. Bank tellers are sweating like they're in a hostage movie. And guess what? The money isn't just sitting there in a vault. It was lent out to people like Bob, who, didn't pay it back. So now, even folks who weren't part of this no loan payment rebellion are getting burned. And then, credit rating? Oh, forget about it. Bob's credit score drops faster than a phone on 1% battery. Lenders stop trusting everyone, not just the rule breakers. Even if you've paid every bill on time since you were 12, you're now considered high risk just for existing in this mess. Buying a home? Not happening. Getting a car loan? Hope you like scooters. Financing that engagement ring? Looks like it's back to candy rings and romantic picnics. And now, companies that need loans to grow, or just survive, are stuck. Imagine a giant supermarket chain can't get a loan to restock its inventory. Shelves start looking a little apocalyptic. No eggs, no toilet paper, just sad, lonely cans of lima beans. And then we hit the really weird part. Governments feel it too. Because when economies slow down, people spend less. When people spend less, governments collect less in taxes. Less money for schools, roads, hospitals. Even Bob's beloved public library, where he definitely meant to return that overdue book. And if this keeps going, a country's entire financial reputation takes a hit. Global investors start getting spooked. Foreign governments might think twice before buying government bonds. The national currency? Yeah, it starts looking about as trustworthy as Bob's get-rich-quick crypto plan from 2021. In extreme cases, we're talking recession, maybe even depression-level chaos. Unemployment skyrocket. Businesses vanish. Governments have to spend more on emergency aid with less money coming in. It's like trying to put out a house fire using a water bottle with a hole in it. And don't forget the psychological part. Trust in the financial system cracks. People start wondering if it's even worth trying anymore. Why save? Why invest? Why pay anything? It's every person for themselves out there, like a Black Friday sale without the TVs. And once that mindset spreads, it's really hard to fix. Even if some people want to start paying back their loans again, the system is so shaken it might not recover easily. It's like trying to glue a Jenga tower back together after it's collapsed. Possible? Maybe. But messy? Oh yeah. Now, of course, this is a worst-case scenario. In real life, not everyone would stop paying loans at the same time. That would take a level of coordination humanity has only achieved with dance challenges and Marvel movie releases. But financial systems are built on confidence and trust. And when that disappears, even in smaller waves, it causes ripples, sometimes tidal waves. We saw it happen in 2008 during the financial crisis. People defaulted on mortgages. Banks collapsed. The government had to step in with massive bailouts. And millions of regular folks, people like Bob and Alice, lost jobs, homes, and retirement savings. Not because they were reckless, but because the system was over-leveraged and nobody asked enough questions. Until it was too late. So, in conclusion, if everyone stopped paying their loans, it wouldn't be some fun, debt-free utopia. It'd be more like someone pulling the plug on the economy while we're all still inside the bath. Banks would panic. Credit would freeze. Businesses would close. Jobs would vanish. Prices would spike or crash. Trust in money itself would take a major hit. And even the people who thought they were escaping the system would find themselves stuck in a much worse one. So yeah, paying loans might not be fun, but skipping them? That could unravel everything. If you want me to make other videos explaining these topics, please like and subscribe. Thanks for watching.